Welcome to Macro Matters. Today, we're breaking down the World Economic Outlook report for November 2024, highlighting growth trends, inflation, key risks, and opportunities around the world. Stick around for a clear view of what's in store for the global economy. First up, let's discuss the big picture. The global economy is projected to grow by around 2.5% this year, down from last year's 3%. High inflation, supply chain issues, and political tensions are keeping growth in check. Growth patterns differ widely by region. Developed economies are slowing down, while emerging markets like China and India are holding steady as growth drivers. Let's look more closely at each. In developed economies like the US, Eurozone, and Japan, growth is expected to slow to about 1.5%. In the US, high interest rates have cooled consumer spending and business investments, pushing growth to 1.8%. Meanwhile, the Eurozone is under even more pressure. Energy costs and wage demands are dragging growth close to zero in some areas. Japan, however, stands out, with a growth rate of 1.3% fueled by improved consumer spending and exports. Emerging markets are performing better, with an average growth forecast of around 4%. China is expected to grow at 4.5%, driven by efforts to boost domestic spending and keep its real estate sector stable. India is forecasted to grow even faster at 6.3%, thanks to strong consumer demand and foreign investments. On the other hand, Brazil and South Africa are facing slower growth, around 2%, due to fluctuating commodity prices and political challenges. Let's talk about inflation, a major factor shaping these forecasts. Although inflation is finally cooling, it's still high. Advanced economies are at around 3%, while emerging markets face around 5%. High energy and food costs continue to drive prices up, especially in import-dependent countries. To combat inflation, central banks have kept interest rates elevated. While this strategy reduces spending, it also risks stifling growth, especially in high-debt economies. Energy markets have played a huge role in economic forecasts. Oil prices have stabilized somewhat but remain unpredictable due to production cuts and ongoing geopolitical conflicts. In response, countries are investing heavily in renewable energy, especially in Europe and Asia, to reduce dependency on fossil fuels and improve energy security. These efforts not only help stabilize energy prices, but also open up economic growth opportunities in the green energy sector. Looking ahead, the global economy faces notable risks. Geopolitical tensions, climate disruptions, and high inflation remain top concerns. For instance, geopolitical conflicts can disrupt supply chains, while climate events can spike food and energy prices. Yet, there are also opportunities. Emerging technologies, especially in AI and renewables, offer significant potential. Countries investing in digital infrastructure and green tech could lead future growth. Before we wrap up, let's quickly highlight some regional economic trends. The US is capitalizing on its tech sector to offset slow growth in other areas. China is managing a careful balancing act in real estate to avoid major instability. Meanwhile, in Africa, countries like Nigeria and Kenya are leveraging digital finance and green energy, attracting attention from global investors. To sum up, the World Economic Outlook for November 2024 shows a mixed picture. Advanced economies are slowing due to inflation and high rates, while emerging markets continue to drive growth. Inflation and energy prices remain challenges, but green tech and digital transformation present exciting opportunities for the future. As we look toward 2025, the global economy will need to balance controlling inflation with fostering growth. Staying informed is key as we navigate this uncertain landscape. Thanks for watching. If you found this overview helpful, please like, subscribe, and hit the bell to stay updated. Share your thoughts on where the economy is headed in the comments below. Until next time, stay informed, and stay prepared.